What's up, everybody? Thanks for hopping on into Millennial Crypto Investing. Right now, we're looking at the S&P 500 chart on the monthly time frame, and this whole video is literally a precautionary tale to give everybody just a little bit of caution in such a over-hyper market, especially with the AI bubble, cryptocurrency and all. So what I'm about to say is going to apply to all markets, whether it's crypto, whether it's stocks, whatever, okay? And I'll make this as fast as I can. It's a lot of information to go over, but essentially here we have the S&P 500, and as you can see, it's up and to the right only. So yeah, if you started investing back in 1994 and you put in $1,000, I mean that $1,000 would be 1,200, like what, 1.2 million. Okay. Now, but we're not back here. Okay. And where we are though is if you would have put that same 1,000 in here, then you would have had to live through that 1,000 going down to $500. Now, what if you put 10,000 or 100,000 and it went down to 50%? I mean, that's pretty substantial. And so while yes, everything is up and to the right on this chart, in the long run, you have to understand in the short term, there is volatility. And while you may think to yourself, hey, it really doesn't matter where I buy, it's going to keep going up and to the right. And even if it goes down, as long as it sells, I'm not going to be at a loss, right? Okay. But living through this period, watching your money deteriorate before your eyes, it's very scary. Okay. And that lasted over 2 years. So imagine living for 2 years in fear and panic of that money. It's very, very unpleasant feeling. So that's why I'm making this video, because that's what a lot of people turn to if they don't know how to do technical analysis, if they don't know how to trade, if they don't know how to determine when to buy, when to sell. Then in the back of their mind, they're like, hey, I can always just hold, right? Like I said, it's going to be a lot more painful to hold through these drawdowns than you would think. Imagine living a year, almost a year here, in that type of fear. Now, this COVID dip, we didn't last, but about 2-3 months, and you started recovering. Okay, not a big deal. And so, that's not so bad. But as you can see, you get a lot of dips. Now, where we are right now in the market, if you're just now thinking about entering into the market, you have to look at the main driving force of this entire world, and that's the United States stock market. Okay, all markets are pretty much going to follow them. And so here we have the S&P. If you're buying here, then you could potentially be buying an environment like this. Okay, you could be buying the top. And so if you're buying here, then you could very well see a pullback from this region. You can see an easy 20%. Okay, easy 20. Like, that's easy. And that's not horrible. But say you decide to put everything you have into this market at this time, well, now you're 20% down on your overall net worth. All right. Now, that is not horrible, but it's pretty bad. Okay. But what we can probably expect when this market tops out, if it hasn't done so already, is not just to come here, but to kind of come down to, probably going to find some kind of bottom in here. So it's not horrible on the S&P, that is, on the S&P. Now, the reason I'm bringing this up and starting with the S&P is because that's going to drive all markets. Now, I'm mainly bringing this up for Bitcoin. Okay, I'm mainly bringing this up for Bitcoin and for altcoins. Now, look at Bitcoin. Okay, if you bought in Bitcoin down here in this region, then you have been able to make about 500% gains, 600% gains, something like that, right? Okay, if you bought in this region, anywhere in here, or in between, $50 and $60,000, you've been able to make, up to about a 100% gain. Okay, but if you're just entering this market here, then the odds of continuing up before a pullback are very slim, even under normal circumstances, and you'd be looking at a 28-30% decline in your investment. Now, so looking at this basic chart, where do you think you should buy? Should you buy the extreme levels like these, or these, or these? Or would you want to buy the extreme lows like these, and these, or even these, or these? That's a simple question to answer. Obviously, we want to buy these extreme lows, right? We want to buy the lows. Everybody knows, buy low, sell high. Buy low, sell high. Now, right now, we are in a very precarious position with Bitcoin and the overall market. Just looking at Bitcoin, we can see, look at these two monthly candle wicks right here. And it shouldn't take you long to identify similar signs on this chart, should it? Your eye should immediately go to this or this. And when you start printing these double wicks, and that monthly candle closes in 2 days and 8 hours. Mm-hmm. So when you have a setup like this, look what happens after. You get a good move down. Okay? You get a good move down. Now, the basics to understand is support and resistance. Okay, we have support back here. All right? And we have not back tested that yet. So this is probably going to end up rolling over and back testing this region before doing what it did here, came up, put in a slightly higher high, and that marked the top of the bull market, and we entered into a bear market, which I think that's a very good possibility because everybody's shorting here saying, hey, it's over with, market's over, bull market's over. We get to pull down, and then they bounce off this support here, come up, wipe out all these shorts, and that's the top, the same as it was over here. We enter into our bear market. Okay, that's exactly what I think is going to happen. Now, why are we entering into a bear market? Okay, let's look at the S&P again. And I want to show you that every time the federal funds rate, this is the FOMC, United States federal fund interest rates, okay? And here I have a couple of indicators marked recessions in the past. Now you can clearly see that every time that interest rates have risen like this and they've stopped and reversed and started lowering the rates, we have entered into a recession, which you can see annotated by this gray and green box here shadowed. And we see it again here. And we saw a short-lived one here with the COVID pandemic. That was very short-lived. It was kind of an anomaly. And then here, look what we have going on. Look what we have going on. So, we can see, if we come in and zoom in during these time periods after the rates have been, they topped out and they reversed the rate hikes, we can see that after every one of these periods, almost, like I said, COVID was a little bit of an anomaly. And so we can see, let's just take this off so we can look at our lines, because that gives us everything we didn't know for right now, is that this is when the rate hikes were reversed. Every time. Okay? We went into a deep bear market. I mean, this is S&P 500. This is the top companies of the world. And that bear market lasted for over 2 years. And the recovery from peak back to peak, before you even recovered your losses, it took, man, I'm not that good at math, but what's that, like 8 years? Is that 8 years? Okay. Yeah, almost like 8 years, 7 years, about seven years. If you was to buy this top, that it took you to get back to break even. So if you're buying here and you're saying, it's okay, I'll just hold as long as I don't sell, then I'll be all right. Imagine 7 years living through this for 7 years, and your money for so long was down 50%, 30%. I mean, that would be absolutely horrible. And so by the time you got back to break even, it had been 7, 8 years. Now imagine, though, if you had the ability to look at this chart and say, hey, this is probably not a good time to buy, right? So I probably should wait on a pullback. Well, what would you do? You'd come over here and you say, well, where was a good time to buy, based on if price came down to a level, where would be a good place to buy? Well, we can see here where you had clear resistance right here. And so when price came right here, that'd be a good place to buy. Now, would you put all your money in right there? You could, but it would be better to put a piece in and wait and see what happened next. And then if you waited and you seen price dip below there, wow, you could have bought some here. Okay. Now, would you have put all your money in here? You could have. But wouldn't it be better to wait and see what happens? And then you get to move down. And lo and behold, look where you could have got in again. Right in this region where you've seen some resistance and support being built. And you bought in here. Now, instead of writing your money down 50%, if you bought up here, okay, instead of writing down 50% and then 8 years later you're back to break even, what if you did what I just showed you and your average entry was somewhere in the middle? Say if you had $100,000 invest, you invested $33,000 here, $33,000 here, $33,000 here. Your average entry would be somewhere in this mid-range of the two buy-ins. And so instead of going back to break even with that $100,000, that $100,000 would now become $157,000 by the time you got back up here. Now, what do you think is better, right? Okay, so we've covered that. Now, we can see what happened here on that green line, and we can see what happened here on that green line. Okay? Same thing. Okay? Now, what do you think is going to happen on the next green line? Because we have already reversed interest rates. Okay? And while we don't have the gray shadowing coming in yet, we know that back here we didn't have it either. And so this indicator of the federal rate cuts coming into play, the quantitative easing beginning, was preemptive to the dump. So it was not instantaneous. It took a little time. Here we have shots fired. Okay? It didn't happen instantaneously in any of these periods of time. Okay? It did not happen instantaneously. Okay? Here you had 1, 2, 3 months of upside before the dump here. And back here, you actually started topping out even before they started actually dropping the rates. So each time has been different. But here we can see that rates have begun dropping, and yet the market has marched on. Now, what do you think is coming next? What do you think is coming? Based on this research, what do you think is coming next? And so, if S&P 500 it consists of some of the top companies of the world, and you can get a pullback of 20% on the S&P, what kind of pullback do you think you're going to get into a risk asset like Bitcoin? Well, I guarantee you it's going to be more than 20%. As a matter of fact, if you take and do a basic elementary trend line, which would be your primary trend, right? And you draw it out like that, then you can see, even if we backed it up to, let's take this off real quick, and even if you backed up the price chart, let's do that real quick. Let's back it up and pretend that we're back into the past and we're topping out here. And if you would have just took and draw this primary trend line, just draw another one. If you would have took and drew your primary trend line, well, you could have got a rough idea of where you could see price come down to during a bear market. Okay, you got a few different options here. Okay, and nobody can make these predictions of where price can come, but technical analysis gives you an idea of where it could. So let's play the tape out and see, once the top came in and the bear market ensued, where did we see price come to? Okay. Speed this up a little bit. Okay, we can see we got a little bounce here, but I know that wasn't the bottom. Okay, the bottom came in right in this region between that support, this previous resistance, and this previous resistance. Okay, that's where the bottom came in at. We know that now because we're now in the future. So our bottom came in right in this region. So with that being the case, there's a good possibility, if things don't get too bad, that we could bottom out anywhere between some of these areas right here, okay, but it's also a possibility that if you draw your primary trend line out to here, it's a very good possibility that you cannot deny that we come all the way back down to this area here. Okay, that's a very, very real possibility, despite what everybody would say. And let's be honest, that's not really changing anything in the long term on Bitcoin. That's still a bullish trend. But that's exactly what can happen when we enter into this recession. So the same concept applies to the S&P 500 that applies here, is we don't want to buy these tops. Okay, we do not want to buy these tops. We want to wait for a pullback, and we want to scale in at areas that we will find support. When you get there, you cannot say for sure whether that's going to be the exact bottom or not. That's why you're not going all in. Okay, and if you want to play that, then that's how you want to play it. On the other hand, if you're not a long-term thinker and you're more of a short-term thinker, and you're more invested in altcoins than anything else, then we can take a look at Ethereum. And the last bear market, we had Ethereum, which is the second largest cryptocurrency in the world, drop 80%. So even when you're buying quality like Ethereum. Or take a look at Solana. Okay? Take a look at Solana. When you're buying quality like Solana, even though this was the early stages of Solana, the last bull cycle top, you still had almost, it was literally 95% drawdown. So to sit here and say that if these blue chip alts can drop 95%, right, who's to say that they can't do it again, right? Now, I don't think Solana would drop quite that low, although it is a possibility. It is a possibility. All I'm saying is that where we are, based on all the research I just went through, it's a very dangerous time to be trying to buy and hold the S&P 500, much less a risky asset like Bitcoin or Ethereum or Solana, or much less a freaking meme coin like WIF or Bonk or anything like that. So I think it's very prudent and wise to consider that we may very well have reached a market top. And even if there is a little bit more upside left in this market, because you're not going to be able to time the top no more than you can time the bottom. Even if there's a little bit more upside left in the tank, if there's a little bit more gas in the tank right now, is it really worth risking those kind of drawdowns right now? And let me just pull up one indicator before I wrap this stream up that kind of gives you a hint of whether the market has topped out or not. Okay. And we can see, looking at this indicator, that if you go to the weekly time frame, we have what's called bearish divergence. Bearish divergence, where your price is made a slightly higher high, in this case slightly, but your indicator is made a lower low. Okay, that's called bearish divergences. And high time frames are a little bit laggy. Okay, so they're not a thing of precision when you're on this high time frame. But look here, higher high, lower low. And let's pop on all our information here and go back and look at previous recessions and see if our indicator gave us any kind of hint before that happened in the past. Let's take a look at this one here. And you can see right here that you had a slightly higher high here. And then here on your indicator, you had a lower low. And then here you had even a lower low. This was pretty much showing you the top is in. Okay. You could probably go back here, do it again. Let's delete all our drawings. Okay. You can pretty much see market marched up, indicator marched down, and what did it do? It showed you a top. Now, it didn't give you the exact top, right? But it gave you a good idea that a top was coming. And so if we can take and apply the same rule currently, and we can even look at the COVID dip. Did we have anything like that happening on the COVID dip? Let's take a look real quick. Okay. Now we zoomed in here to the daily time frame, and we can see that sure enough, before they even announced COVID, you had higher highs here and a lower low there. That showed you a big move was coming. And so here we are today. What do we have? What do we have? We have a slightly higher high here, and then you had a much lower low on the daily. So I would honestly say that the top is probably in, and we're headed for some more downside based on everything we looked at. look, hit the follow button. Let me know what you guys think. Drop your comments below. Appreciate you watching.